Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be going over our usual candle-by-candle analysis, and if you're not familiar with what we're looking at on candle-by-candle, effectively, and there are a lot of videos that go over this, but it's a way that we can utilize market that's already happened, but as a way to gauge our understanding of the underlying. Now, I know that seems super vague and kind of like, ooh, it sounds sort of mystical. What I mean by that is ripping apart the markets from a psychological perspective and understanding what's going on underneath the surface, if you will. And when we have that understanding, we have our context. And that's the whole purpose of this, is going backward one candle by one candle by one candle, and seeing how did the market respond? What do we think it's going to do? How do we think the market's going to operate from this information? Are traders happy? Are traders stuck? Are they upset? What's going on? And all of those little nuances gives us the clues in terms of what to expect next. So starting out of the gates here, they kicked off with a decent gap to the upside, but we need a bit of context, right? Let's look at this in the overall scheme of things here, and we can see that, well, I mean, really, we've got a halfway decent gap to the downside the day prior, rolled all the way up, hit the gap, the settlement price, and then just went screaming to the downside. Now, obviously, the sellers have some gumption. Right? It's fairly obvious that the sellers took over in that move, but let's just see where they're at. If we go from the top of the move all the way down to the bottom, this will give us an idea as to where the move sort of sparked. And that tells us, well, it seems as though the move sparked from around the 180s. And where we are right now, we're kind of in the middle. That doesn't really help anything. In fact, if we were to look at the previous day's 5-minute bar, we're back inside that again. So that could be something to potentially keep an eye on. You know, normally I'm not going to look way back at those previous 5-day bars, but the fact that they opened up inside of it, we held support, kind of held support, a little bit of resistance and support inside there, and now resistance at the top. Maybe it's something that we can utilize to our advantage. Either way, the POC is way up in the 180s if we're looking at just the move from the top to the bottom. If we go across all the way to the end of the day, we can see that the POC did not change, although there is a big chunk of volume that's building up down in the 960s. So what does that tell us? Well, if the POC is way up here at settlement, we had a rejection off of settlement and the market dove all the way to the downside, very realistically, a lot of sellers are going to be looking for a reason to get into this move. Now, that could be an ascending wedge. In this case, it looks like that's the route that they chose, but they did it a little bit too late. They went to the end of the day, and with the end of the day, it gapped all the way up here. So if we look backward and say, all right, well, let's highlight this candle. What happened here? Oh, now we can see why they may have wanted to come back here. They're filling in volume. This is a VVP. If you're not familiar with those, there's a video that goes over that. But they're filling in this void in volume. Here's a kind of a hint as to what that acronym stands for. That's a volume void pocket, just as a side note. The market came back and they're filling in some of that volume. So obviously we're backing up and we're filling in some previous movement. And this was probably a stop run from the longs on that move down. Okay, well, we have a bear bar that kind of kicks things off. We're gapping to the upside. We're in an area of resistance. The anticipation is that the bears continue back down, but we also have some concerns that the sellers tried to get it to go down and it gapped up. Right, we've got some issues here that puts them on a little bit of a back foot. So this first candle of the day is really kind of suggesting, well, wait a minute here. You know, we've got a situation where they may be trying to get something going, and if we measure this volume on the candle up, it'll give us an idea of where the volume is, kind of in the middle. The market's closing underneath. We're underneath the moving average for what it's worth. And we know that the bears are going to try to go down, but how far they're going to go down is the big question. I don't necessarily want to be selling directly underneath the first candle of the day. That's going to be a little bit of a difficult time. And if we're looking at this from a realistic perspective, this is only the first candle. Right? We might have to wait for a bit more info to play out. So as we go into bar 2, we've got a pretty good context, right? Really strong bear bar to the downside. We're seeing some halfway decent follow through. If we look at the volume to the downside, we've got the POC, which is again demonstrating that sellers want to maintain their strength underneath. Two strong bear bars. Doesn't necessarily mean I need to sell everything and short everything back down because, well, 2 isn't necessarily enough. When you start getting 3 or 4, maybe that's a little bit of a different story, but this is a good start. They're kicking things to the downside, and they're really trying to get things going. Some sellers will opt to sell underneath, but we've got to be realistic here. That's dangerous. We already know that sellers are potentially stuck from down here, and they may be looking for reasons to get out. We've seen a lot of volume build up down here before. It wouldn't be a surprise to see them build up a little bit more. We'll have to wait and see. So far, I don't necessarily know that I want to do anything, although it does feel like we've got a bit more of a bearish bias. If I were to sell, I would rather sell above the previous bear bar's high, just to offer up a lot larger reward versus risk, because that's really the only area that we've got to work with. We do also have the settlement, which is kind of in the middle, and that creates, I suppose, a little zone that we can work with. But that's about it, right? We go into bar 3. We don't have any candle gapping to the downside. In fact, it's a negative gap, meaning that they filled it in and then some. But we haven't really proven anything. You know, I mean, it's a heavy bear bar down with some wick. We've got a big old bear bar to the downside closing low. And now we've got a weak bull bar closing almost as a doji, and only a couple ticks more and it would have been a bear bar that was pretty strong. So we have to ask ourselves, is this a realistic bullish move? Does this make any sense for the bulls to come in on this? Right? We know that the shorts are possibly scared. Maybe the bulls will utilize that to their advantage. But this seems to be more of a situation that sellers will sell into a bull pop to try to get a continuation phase down and also offer them up a better entry point. Or not. They did go up a little bit, I guess, but basically 2 inside bars. Technically, I suppose they did go above that last bull bar's high. Albeit very, very small. Not really enough to convince anything, but if we're looking at the overall volume, let's see what's going on here. I've obviously got this drawn wrong. Let me move that forward. There we go. So we've got a little bit of a concern. We've got our POC, which is starting to shift to the bottom side. It was acting as a resistance the whole way down, but now the market is trying to close on and above it, just by a couple ticks. But it is closing above it. And given the fact that we do not have 3 strong bear bars to the downside and a lack of follow-through from the bears to really keep it going, one could argue that these sellers who were getting stuck down here, who were looking for this, they didn't know they were stuck, they were looking for it to roll down, opened up way up here, right? Now they're trying to figure out like, oh no, that's a problem. Sell, sell, sell. As it starts diving down, they start exiting at those break-evens, start eating the losses. They're trying to mitigate a little bit. So there is a bit of a concern that some traders may be looking for a continuation to the upside. This is by no means a 2-to-1 or 3-to-1 scenario. This is only a scalp scenario. But that would be the assumption, is that the bulls have at least enough, or the bears' weakness is strong enough to get a pulse to the upside to finish off the bulls. We do get a continuation pulse to the upside to finish off the bulls. We're going back up to the highs, and that's a really strong bull bar to keep things going. The overall continuation depends on where this next candle lands. We have a maybe candle gap, but we don't know where the next candle is yet. So there might be a candle gap to the upside poised for a really strong breakout. And if we zoom out, we can look at where that breakout location would be. Very obvious zone of resistance, both volume and structural, just a little bit further up into the 120s. So if the market is going to break further up, it would make a lot of sense to see them reach back up just a little bit further to finish the job. And then really, what's to stop them from sliding a little bit further and tapping that POC once again up in the 180s? So there is a pretty obvious reason to believe the bulls here. But again, I mean, when we zoom out a little bit, do I really want to be that big of a bull? Or is this possibly buying a little bit early, right? If I wanted to be a swing trader, I would want to be buying down here, high or low, something like that. I don't want to buy like halfway up a swing. That doesn't necessarily make too much sense from a structural perspective on a normal reversal. So where we are now doesn't justify any swings at all. That means that it is only scalps. So if it breaks above that bull bar, once again, looking for a scalp continuation to the upside, although the risk is incredibly high, does make some sense for a continuation pulse. Now, if we're looking at where that target is, that's where the problem starts. That's a difficulty. Really would like to see the targets land a bit sooner than that, which means that this one, man, I would really like for a possible long breakout scalp, but it's too much risk and it doesn't put the target in the right place, so I've got to skip it. Maybe if they can trigger in and off a better entry point, we might have something to work with. The next point of entry really looks like we've got some halfway decent support that they built up down here, trying to get that floor to be created. Okay, well, the bulls were not triggered in. We have a bear bar to the downside, and now we finally, for the first time in a little while here, have some candle gapping to the upside. Upside objectives would dictate that we have an upside target of not very far above the highs. In fact, it's only about 1 or 2 ticks above the top. That doesn't really help out a whole lot. Buyers may be looking for a continuation higher, but where are they going to buy? Above the high of the bull bar for 2 ticks? It's just not worth it. There's too much risk involved and not even close to enough reward to make it worthwhile. So let's keep on going, see what happens next. Yep, as expected. Nobody wanted to show up to the party. The bulls know that it's not favorable, so it starts falling back through the opposite side. And now this is the shot. Like, let's look at the overall volume here. We've got the POC, which is shifting. The bears are starting to trigger underneath. This is a very realistic reason, given that the bulls are not taking the bait up here. And the bears know that they have a very strong trend to follow up with a continuation down. And stuck bears who are going to be looking for their break even somewhere down here. We know that there's at least enough distance for a possibility of a scalp, I believe. If we measure off the highs down to the lows, yes there is. Our scalp target is inside the low. So it works out optimally for a downside move. We're closing underneath settlement. There's also a possibility of a candle gap depending on where the next candle forms. There's some definitive reasons to believe that the bears are trying to pull back to the downside to complete the objective. Now, that said, when we're looking at the overall bigger picture here, we have to take into account where the overall shorts were really stuck from. And the majority of that market volume took place at around the 960s to 65s. Another pulse in volume a little bit further up. That was on the way down, mind you. And then we also have another pulse in volume right here. So if we're looking at a break-even point between these, I mean, really the most obvious one is down here in the 960s, but depending on how much work they do, if they have a POC here, it would only have to go to about in the middle to be about a break-even point between the two, right? We would have a faux POC from down here, and we have the POC from this morning so far there, and that would place a break-even right about in the middle. So we've got to be cognizant of the fact that shorts are looking to get out. If we can get a little bit of a pullback to the POC or something along those lines, maybe even to retest the gap fill at 82.50, just as a bit of resistance to the downside, that would offer up the shorts the ability to get, I don't think they can get a 2-to-1, but they can still get a scalp to the downside, and that would be right back to the bottom of the candle. So that would be absolutely perfect. If sellers are going to be looking for a downside trigger, then really their stops are going to be a little bit further up in their targets. It's a little bit less favorable. I would like to see a slight pullback if possible, although it might run away without us, depending on how nervous the bulls are and how anxious the bears are to get out. Okay, so we have a quick little whip back into the entry point. They dive down and they take profit down into the lows. It did work out nicely. A little bit more back and forth, and a little bit more back and forth. All right, so we're definitely sure that one thing is very obvious that's going on here. The sellers are trying to gain continuation to the downside. We have a very obvious POC, which is attempting to hold, but the sellers are completely falling on their face down here, and why would that be? Well, we know that the shorts are stuck, and they're getting out at break even. So if we're looking at this realistically, seeing all of these wicks on the bottom definitely doesn't give me the warm fuzzies. I would like to see this bounce up sooner than later if possible, and they're already starting to run out of time as they go into the 1025, 1030 area. If the bulls can rally back above well, it might as well be a bull bar. This bear bar is high. Bulls will offer up a possible long opportunity, but it's got to fit a scalp. And it does. So scalpers will have an opportunity to take this back to the upside if they can get that moving. Just given how weak of a bear bar this is, it's absolutely beautiful. Now, the only thing that might cause some issues, if we look at the volume... Okay, nope, never mind. That doesn't cause any issues at all. That's actually even better. We've got the volume on the right side of thing. The market's closing above it. Perfect. So let's see if we can get a continuation to the upside. Or not. No trigger, so the bulls do not trigger in. They're having a little bit of a difficult time. Poking their head underneath that POC may mean that sellers are trying to kind of force their way through there, but that certainly is not a strong enough bear bar to get the job done. Well, maybe it is. That is a nicer bear bar, that is for sure. As far as the continuation phase to the downside is concerned, I mean, again, we know that the break-evens are going to be hovering around there. Let's see if that fits a scalp. If we were to enter short underneath that bear bar with a stop above that bear bar's high, Does that fit a scalp to the downside? Yes, it does. So sellers do have a reason to believe, at least from a scalper's perspective, that they can get some follow through, maybe back down to a quick new low. It's selling very, very low. And again, as we've been talking about, it would be preferable to try to get an inside pullback, try to get a slightly better price, get something that's a bit more favorable to get those targets just as close as possible, because you're selling basically at the bottom. But the objective is to try to get it down to fill the gap through 16,000 a little bit further, but with break-evens in the middle. We have a continuation down. They tag the scalp target basically to the tick and immediately push right back up again. And a very strong bullish response. So again, this is the causation of when you're selling all the way down at the lows and why it can be so troublesome, because, well, when you're selling at the bottom and you're trying to finick that little extra 1 or 2 ticks out of it, that's not the time to do it. You're selling at the lows and there's a very good likelihood that it bounces back up. Not to say that sellers won't try to sell again, but we're right back up to that POC point. It's already gone down and tested if you didn't get filled down there to the tick. And now we're all the way back into the negative. Not many traders are going to let a very nice winning scalp that was positive $180, $190, $200 go negative 200, negative 300. That's not going to fly. A lot of scalpers are going to liquidate as it starts coming back, or possibly even at break even or with small losses. Seeing it go all the way back up then means that, given that we have a perfect response off of a scalper's objective and a rotation back up, can they get above the POC? Can they get above it? Oh, that's not quite. They've got to get back above the POC if they can get things going. So unfortunately, the entry point's got to be a little bit further up with the stop a little bit wider to offer some buffer. But does it fit the scalp? It fits the scalp up into the moving average, and we've got plenty of back and forth inside of there. So if the bulls want to try one more time on this weakness from the bears, they've got a shot. It's just a scalp. We don't have anything else going for them, but it's going right into the lunchtime session, going into 11 o'clock. Let's see what they can get going. Beautiful continuation phase to the upside. Horrible follow through, but notice what they're staying above. They closed above the scalper's target. The bears are not able to close back underneath it. That is possibly indicative of another leg to the upside. So long as they stay above that scalper's target, they're good. Okay. Well, they're on top of it now. I guess that's not technically underneath it. Let's see. What do they do? All right, now they're underneath it. So this is where things get very interesting. From a psychological scalping point, the bulls were looking for follow-through. What the heck? I don't know. Okay, nope, that's a problem. What do you think they're going to do when it comes back up to their target area? They're going to hit the outs hard. So if you are quick enough to see these types of scenarios, this is a zone, understanding the context, where sellers can utilize this as a rotation back to the downside. The probability on something like this is not scalp. We can actually fit a swing into this. Almost a 3-to-1, not quite. We can fit a 2-to-1 to the downside. So we're finally starting to see the sellers offer up the ability to take this a little bit lower. They barely trigger in, but they do pull back. They get the entry point. We're getting a little more follow through to the downside. Get rid of this old one. A little more right down to the tick again off of that 2-to-1. You can see exactly what these traders are doing. That's the beautiful part about when you know the context. And there it starts bouncing back to the upside again. Right back to break even. They defend. Pulses all the way up through. And, okay. If it goes above that bull bar, it's game over. Bears coming back down. They're holding on, small little flag, starting to break the flag, right back down to the target area. Now here's the thing. When they're down to this target area, where do they close? They close directly on top of it. That's a problem. Can they get underneath it? Remember, just like the scalper's target, if they get underneath it and they hold it, they're probably going to keep going. They finally close underneath it. Let's see if they can go back and utilize that as another zone of resistance. Now, obviously, if you were going to sell off of something like this, your stop would have to be way up in the stratosphere, and I know we were going to quit the video a long time ago, but the opportunities just keep showing up. This would be a obvious scalp to the downside, and guess what? It still fits. The target is to get down here into that middle point for those sellers to get out of break even. They haven't had the chance yet, so it fits for a scalp. The sellers have the opportunity to try to get a little bit of a pullback, retest that 2-to-1 objective, and try to continue down for the follow-through on a 3-to-1, maybe even further. Obviously, this would be a new entry with a scalp. We'll see if they can come back. Ooh, man, they tested it to the tick, and they cycle all the way back to the downside. I know my luck, I wouldn't have been filled there, but we can see that the traders that are taking profit into that low, and that created the next base. So understanding the context is a huge part of what we're looking to do, and that's why going candle by candle like this is so incredibly useful. Even though it is hindsight, as long as you don't cheat and look forward, this is an incredible way to hone your skills and the understandings of what's going on behind the scenes. Now, I have seen a couple comments, and I addressed this a couple times as well, about it's super easy to take a screenshot and then just go back and go candle by candle then, and you know what's going to happen. That's true, but it's also not going to help you learn anything. Going this way really allows us to say, okay, this is what I'm expecting to happen. I lay my entries out ahead of time. If they trigger, they trigger. If they're a win, they're a win. If they're a loss, they're a loss. The important thing here is that we are learning every single day. That's going to do it for this one, though. I hope you found it useful, interesting, entertaining, and of course, if you have any questions, drop them in the comments below. Until the next one, enjoy, rest up, and we will see you all then. Thanks. Bye.